broad-based.
Absolutely.
So
I agree.
let's talk about the Mag 7 and Nvidia.
Yeah, that's why it's my first, and this is what keeps me up at night, Sam. These are my thoughts. But Nvidia can be the next catalyst. So I heard a lovely stat this morning. It now makes up 8% of the index, and by market cap, it is the largest in its history ever.
Wow.
So if that doesn't say that it can absolutely move the market, it absolutely will. But that is the beauty of this. There is hyperscaler spend surge. We saw this with Meta, Google, Microsoft, Amazon. They are spending because of what happened with that BBB bill. Mm-hmm. And also, we're getting clarity with tariffs. Now, if we can play nice with fiscal policy, we can get an exemption. And the one thing the market does not like is uncertainty. So now we see an increase in spending because they can, that influx of cash. The person who's not spending and benefiting would be Nvidia.
Right.
So that has to be a catalyst. It has to be a tailwind. I really think that this is going to fuel CapEx upgrades mm-hmm. and will help pull the market because it makes up 8% of the index.
Well, to Dan Ives' point, I mean, he's been talking about the fact that every dollar spent at Nvidia has those knock-on and flow-on effects. Interesting stat, 8% of the index on the 8th day of the 8th month.
Oh,
Let's get to Kevin to take us through the chart. Auspicious or what?
Well, it's a little scary that it's 8% of the overall index, but we are seeing, once again, a bull trend when it comes to this name. When you're looking at Nvidia overall, we've seen these well-defined channels over the last year. Last year, around this time, obviously we had a little bit of a breakdown, double bottom pattern happening here, and we had, once again, a significant area of support as well as resistance when it comes to this channel. We flagged out a little bit. Obviously, going into December, it was a little bit more of a wider channel. Volatility was up. We tested that 200-day moving average. We lost it. And then we saw a little bit of buying coming into the market here. Now, what's actually very interesting, if you actually extended this down channel here, this actually does still come into effect. You see a breakout. That breakout occurs at the 200-day moving average. And once again, well-defined ever since. I mean, it's really hard to try to fade this name at this point in time. The only thing that I will say that could be a little bit bearish or maybe signals some consolidation on the horizon here is the RSI. We are actually seeing lower highs at this point in time. So as price is moving up, we have also RSI kind of moving to the downside. MACD flattening out, still over the zero line here, but you do have the 12 EMA below the 26 EMA. Obviously, it's still bullish. It's bullish until proven otherwise. What you would want to see is a break of this channel, which also aligns with that 20-day moving average. That would be your first signal. A little light up here when it comes to volume as well. And if we do see a breakdown, that 200-day moving average is going to be your first area of support. So I can't give anything to the bears right now for Nvidia, but what I can say is that if you're a bull, continue to trade the trend as the trend has been intact.
Yeah, it seems to be.
Nvidia has a $300 billion advantage already. For a brief period, Microsoft's stock was able to surpass the $4 trillion mark, making it one of only two businesses in history to do so, along with Nvidia. The question now becomes which corporation will reach $5 trillion first, as two rivals have already surpassed the $4 trillion mark. Since it only takes a 25% increase as opposed to a 33% one, going from $4 trillion to $5 trillion is far simpler than going from $3 trillion to $4 trillion. These businesses will thus continue to break through these market capitalization restrictions at a faster rate. But when can we anticipate that these two will do so? One of the most well-known IT companies nowadays, Microsoft sells a broad range of goods, from cloud computing to gaming consoles to business software. The Intelligent Cloud division, which is headed by Azure, its cloud computing service, is obviously the show's main focus. Since Microsoft has emerged as the leading platform for developing cloud workloads, Azure is seeing rapid growth. Cloud computing is helpful for AI workloads, but it can also handle more conventional corporate tasks like data processing, information storage, and website hosting. Cloud computing is experiencing an incredible twofold tailwind and is expected to continue to do so for many years to come. Nvidia computing gear is frequently used when a business like Microsoft constructs new cloud servers to satisfy demand. The graphics processing units, GPUs from Nvidia, are the best in their class and incredibly versatile for handling a wide range of tasks. Because of its adaptability, data centers can use the same computing units to handle different workloads as needed. Although Nvidia offers GPUs for a variety of applications, data centers are by far its largest market. Nvidia anticipates that capital expenditures for data centers will increase from $400 billion in 2024 to $1 trillion by 2028, driven by the same tailwinds that are driving up demand for cloud computing and artificial intelligence. This is encouraging for Nvidia's growth story and demonstrates that it can keep up its quick ascent. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video. Despite having strong growth stories, what do the numbers say about Microsoft and Nvidia? It seems that Microsoft makes more money than Nvidia. It is evident that Microsoft has a significant advantage over Nvidia when comparing the revenue generated by each company. However, Nvidia is being held back by a few things. First, the US canceled its export license to China, which resulted in low net income figures for the first quarter. With guarantees of approval, Nvidia has reapplied for that license. However, Nvidia's H20 chip sales decline may hurt its Q1 and Q2 net income numbers. Second, Microsoft has a slight advantage because Nvidia has not yet released its Q2 figures, which are expected later this month. Finally, and perhaps most importantly, Nvidia is expanding far more quickly than Microsoft. Microsoft's net income increased by 24% in the fourth quarter of fiscal 2025. That's remarkable growth given Microsoft's size and maturity, and investors shouldn't be concerned about the outcomes the company produced. Nevertheless, despite being significantly impeded by a write-off of H20 chips, Nvidia's net income climbed by 26% in the first quarter of fiscal year 2025, ending April 27th. Nvidia is slightly more expensive than Microsoft since it is anticipated that its earnings will increase more quickly. Despite having a lower net income, Nvidia is worth more than Microsoft because of this premium. I believe Nvidia will probably surpass Microsoft to reach the $5 trillion milestone due of its higher valuation and faster growth rate. Despite Nvidia's results being hindered, Microsoft's growth is still slower than Nvidia's, despite the latter's remarkable growth. Nvidia still has the advantage, but both stocks are great companies to acquire right now, in my opinion. The foundation of the AI data center architecture is still Nvidia. The corporation isn't slowing down. In Q1, its graphics processing units, GPUs, had an astounding 92% of the GPU market. Its product development cycle has been quickened, and in order to maintain its lead, it now plans to release a new chip annually. But the company's true strength lies in its CUDA software platform, not merely its processors. Years before AI became widely used, Nvidia promoted its use at academic institutions and research centers by providing its CUDA software platform for free. A whole generation of developers was taught on its platform as a result of that early decision, which caused a flywheel effect as frameworks and tools were developed on top of CUDA to enhance its chip performance. That approach has greatly paid off, as CUDA is currently the cornerstone of AI research. Competitors are years behind in software while rushing to catch up in hardware. Nvidia keeps branching out into other industries in the meantime. Its automotive division, which facilitates robotaxis and autonomous driving, may be its next significant growth engine. The Trump administration's recent indication that it may permit the sale of H20 chips in China gave the company a boost and added another development engine. With a PEG, price earnings to growth ratio of less than 0.9, Nvidia still appears appealing despite its incredible run. PEGs less than 1 are seen as undervalued. When you combine a strong market position with exponential growth and a deep moat, Nvidia's long-term outlook is incredibly enticing. As overweight, Morgan Stanley restated that Nvidia benefits from the continued strength of artificial intelligence capital expenditures. Through 2026, hyperscalers' capex remains strong. The demand for AI is expected to continue high. The market appears to be still rather optimistic about the entire AI story in the early hours of Friday, but a lot of momentum has been used up, and we may be nearing tiredness overall. Value hunting is the way to go, to be honest. Nvidia's market appears to be poised for a slightly higher opening, although to be honest, this is a market that is currently experiencing some strain. Nevertheless, I wouldn't cut Nvidia, and I enjoy the concept of purchasing dips because they are a good investment. Nvidia has strong support close to the $175 mark and then again at the $170 mark. When the market was at its lowest in April, it had essentially doubled in value. It does appear to be a one-way market at this time, and you must handle it as such. You just cannot get caught up in the idea that it is too costly and begin to sell. Instead, you should consider that it's becoming somewhat expensive. Let's check to see if it is on sale. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.